Jay Massey here with the CashflowDiary.com with another quick tip about real estate and business. Today we're going to talk about one of my most favorite subjects, passive income. So what is passive income anyway? A very simple definition. As many of us know that there are other forms of income as well, right? We've also heard of active income, right? You've also heard of possibly portfolio income, portfolio income. And a lot of these definitions come from our Internal Revenue Code. But what is passive income? Passive income is just that income. Think of it very simply. It's income, not necessarily, it doesn't mean that you're uninvolved in the generation or creation of it, but what it does mean that you don't have to literally get up and do something all the time to create it or make it happen. So you are more passive in its creation than you are actually active. See, most of us are very, very familiar with active income. When it comes to active income, this is what when we get up, we go to our job, we go to work, we do something, we get paid one time for it, and it's done. Portfolio income typically requires using more capital or cash to go out there and create something, usually a stock. They'll pay some dividends or things of that nature. That's where we're talking about portfolio income. Passive income usually means that we've bundled our labor in such a way that now we don't have to labor every day for it, but we've sold our labor, we sold our intellectual property or ingenuity out into the marketplace, and it continues to come back to us in these small streams of income over time. Well, here's some quick math that I want to share with you. Let's pretend that what you want it to do, because this will teach you the power of passive income right here. Let's pretend that right now at your job, what you earn is $2,000 a month. Okay, I'm going to use that number. So if you earn $2,000 a month, well, there's 12 months in a year, therefore $24,000 is what you earn over the course of a year. So, but that's active income. So how many hours do you typically work, at least in the U.S., to get to $24,000 in a year? Well, average, you're going to work 160 hours on a month, and you're going to multiply that by 12. So I'm going to grab my calculator because don't remember the numbers. And that's 1,920 hours. So you're going to invest 1,920 hours for $24,000. Now, obviously in this example, I'm not talking about taxes and all those other things right now. Right now, I'm just trying to give you an example of passive income. So here's one thing. What would it take to say, before I give you the example of passive income, because this is active, right? So now I'm going to talk about portfolio. Portfolio income is that income that tends to happen, like I said, you usually use a whole bunch of cash, you stick it somewhere, and it pays you interest and dividends over time. So for the sake of this example, let's use a bank CD so that you can have an understanding of what it would take, that same bank CD, to be able to produce $24,000 annually. So here's what we're going to do. We want to end up with $24,000, right? That's what we want, is we want to end up with $24,000. What we don't know is how much money do we have to have in the bank at an interest rate. Let's be a little aggressive, possibly conservative, depending on your viewpoint. Let's say 2%. So let's say the bank is willing to pay us 2%. What I want to know is how much money do I have to have in the bank right now today to be able to earn $24,000 a year? Well, the math is relatively simple. All we're going to do is take $24,000 and just divide it by 2%, and we're going to come up with a number. So that's 24,000 divided by 2%, and that gives us 1,200,000 So here's the good news. All you have to do is earn $1.2 million, stick it in the bank, touch it, don't touch it, find a bank that pays you 2%, and then you'll be able to live on $24,000 on a yearly basis. Now, again, we're not even talking about taxes and all those other things, but again, this is portfolio income. All right, this is portfolio income. Portfolio. Okay, so that gives you an idea. Well, here's one of the things that I absolutely enjoy about, real estate, and particularly apartment buildings, because that's one of the things that I like to do. All right, so is it possible for an apartment building to be able to produce $2,000 a month? Well, obviously the answer is yes. So let's look at it. What kind of apartment building would that be? Let's just keep it simple. Like, a simple goal is that I like to try to net $100 per door per month. So $100 per door per month is a simple target to try to hit. So if I wanted $2,000 per month, that would typically mean I'm looking for a 20-unit building, okay? A 20-unit building, and after all the expenses, I want $2,000 to come in. Here's the good news about real estate. Depending on the market you're in, what does a 20-unit building cost? See, for some people, a 20-unit building may only be somewhere in the neighborhood of $400,000 or less. Now, for some of you, especially if you're out in California, that same building could easily be $2 million, depending on where it's located. Now, here's the fun and power of passive income. First, here you've got to spend 1,920 hours to get $24,000 of active income. Here, you've got to earn $1.2 million. Is it easy to say that that's going to take you more than probably 1,920 hours to do? Well, the question is what would it take? Let's use the expensive side. Let's say that the property is $2 million, but what you wanted to do is be able to control it so that it would produce $2,000 a month. When you go to buy real estate, and this is one of the big things that I love about real estate, is being able to use leverage, also known as OPM, right? Also known as OPM. Here's the point. That $2 million property, in some cases, it is possible for you to be able to only put, let's say, 20% down to keep the math and things simple for myself, so that in this case, what you have to do is you take the $2 million, 2 million, times 20%, and you come up with a number that's $400,000 as the down payment. Now, I'm going to exclude escrow fees. It's just a simple illustration because I want to show you the power of passive income. And now, this $400,000 is representative of the down payment. So what happens here is that $400,000 is what was invested, and what you come out with on the other end is $24,000 from the income, okay? So that $24,000 of the income over the $400,000 is going to give us yet a new ratio of, 6%. Now, that 6% is a 6% cash on cash return, which is kind of nice. And something to think about in this particular case is, where did that $400,000 come from? For sometimes, because it's real estate, it's very possible that even that $400,000 didn't come from you. And if it didn't, that's great. Sometimes it is possible to be able to use that $400,000 in very creative ways, and more importantly, ask the seller for the $400,000, which then creates a completely different situation. But here's the point. How many hours does it take to put this together? Is it less than 1,920? Is it less than the time it takes you to earn $1.2 million? I think you understand that the answer is yes. Let's just assume it takes an entire month or even 2 months to put this together. What does that now mean? That same $24,000, and if you worked 40 hours for each of the 40 hours a week for 2 months straight, that same $24,000 you did in 320 hours. That would come out to 320 hours is $75 per hour, which isn't so bad. And that's assuming you put in the $400,000 and, more importantly, that it actually took you that long to put the deal together. In a lot of cases, it just doesn't take that long. If you like information like this, you want more of it, feel free to go ahead and subscribe to our YouTube channel. You might even want to check out a couple of other videos as well while you're here. And look forward to talking to you soon.